Here is the second part of our first lecture of the course, and let's discuss the role of technology in financial innovations. And I think this is a really fascinating topic that sits at the intersection of finance and technology. And therefore, we have a term fintech, financial technologies. And we have another term, technological finances, TechFin as well. So I'll tell you the difference afterwards. But anyway, I'm excited to explore it with you. So in this part of the lecture, we'll examine how various technologies have transformed financial services throughout history and continue to drive innovation today. And we will look at specific examples of financial technologies, their impact, challenges, and future potential. And this understanding is crucial for anyone planning to work in modern finance and or in fintech sectors. So let me set the context for our discussion. Every major advancement in the financial services, from the first coins to today's blockchain networks, they all have been enabled by technological innovation. And you'll need to understand not just the technologies themselves, but their broader implications for business models and for customer experience and for regulatory compliance as well. And throughout this part of the lecture, I'll try to share real-world examples and data points with you to help illustrate these concepts. Next slide. Let me start by giving you a broad perspective of what we mean by technology in the context of financial innovation. And it's important to understand that technology isn't just about computers and smartphones. So it's any tool or system that helps us accomplish tasks more efficiently. And when we look at the evolution of financial technology, we can trace a fascinating journey from the most basic tools to today's sophisticated AI systems. And you can think, for example, about it in the following way. For example, the abacus was once cutting-edge financial technology, just as artificial intelligence is today. But each innovation built upon previous ones, creating increasingly sophisticated ways to handle money and financial transactions. And I would like to emphasize that technology in finance is really about problem solving, because whether you are talking about ancient accounting tools or modern automated trading systems, the fundamental goal remains the same, to make financial operations more efficient and reliable. And the key difference is here the level of sophistication and the level of scale at which we can now operate. And the definition on our slide captures this perfectly, actually, because technology encompasses everything from basic tools to complex systems. But what is particularly interesting for us in finance is how these various technologies come together to create entirely new possibilities for financial services. So let's explore many of these thoughts out in our lecture. Next slide. Now let's break down the three main types of technology that are particularly relevant to financial innovation. And each of these categories has played a crucial role in shaping modern financial services. So let's start with the mechanical technology, which might seem basic, but it was revolutionary at this time. You can think about the first mechanical calculators used in banks, for example, or the sorting machines that revolutionized how we handle physical cash, or these mechanical innovations indeed laid the groundwork for everything that followed. And moving on to electric technology, this was truly a game changer for financial industry, because when banks first introduced electronic systems for record keeping and transactions, it completely transformed how we handle money, because electronic technologies gave us the ability to process transactions at speeds that would have never been imaginable in the mechanical era. But the real revolution, and this is what mostly excites me, actually, it came with digital technology, and the ability to encode everything into binary format opened up possibilities we are still exploring today, actually. Because when you talk about AI in banking, artificial intelligence in banking, or blockchain or automated trading systems, so we simultaneously we're talking about digital technology. And what makes digital technology particularly powerful, it is its ability to process information in ways that mimic and often exceed human cognitive capabilities. And I find it fascinating, really, how these three types of technology often work together in modern financial systems. Because, for instance, an ATM combines all three mechanical parts of dispensing, for electronic circuits for processing, and digital technology for security and account management. Next slide. Now let me share with you something really compelling about the impact of technology in its implementation in financial services. The data we need is quite remarkable, and I would like to highlight three key benefits that make technology adoption absolutely crucial for staying competitive in today's financial marketplace. First, let's talk about increased efficiency. In my experience working with financial institutions, so I've seen firsthand how implementing new technologies can transform operations. And we are not just talking about minor improvements, but we are seeing fundamental changes in how quickly and accurately financial institutions can process transactions, can analyze data, and can serve customers even. And the second point, which I found particularly interesting, is about competitive advantage. Because in today's financial landscape, being an early adopter of new technologies isn't just about staying current, it's about survival. And for example, the institution that move quickly to implement new technologies often capture a significant market share before their competitors can catch up. Let me also share a striking statistic from McKinsey that really drives this home. For example, early adopters of automation are seeing a 20-25% boost in productivity. And this isn't just a small incremental gain. It's a game-changing improvement that can completely reshape a company's competitive position. Because, for example, if we think about that, what a 25% productivity boost could mean for a bank's operating costs and customer service capabilities as well. And also these numbers make it clear, because financial institutions can't afford to be passive about technology adoption, because this competitive landscape is simply too intense and the benefits are too significant to ignore. Next slide. And now let me explain why technology adoption isn't just an option of financial innovation, because it's absolutely essential. See, and doing that, I would like to break it down into three critical aspects that demonstrate how deeply intertwined technology and financial innovation have become. First, let's consider new financial products, because in today's market, virtually every new financial product has a significant technology component. Whether we are talking about instant payment solutions, automated investment platforms, or even digital lending products. So, nevertheless, none of this would be possible without extensive use of modern technology. And for example, I've seen numerous financial products fail simply because they didn't leverage technology effectively enough. And the second point I want to emphasize is about financial innovation itself, because what is fascinating is how dependent modern financial innovation has become on emerging technologies, because we are not just using technology to make existing processes faster, but we are using it to reimagine what a possible changes may be in finance. And the ability to manage vast amounts of data, automate complex processes, and reach even customers through digital channels, for example, these all things have become fundamental to financial innovation. And here is a striking figure that puts this into perspective. For example, did you know that fintech startup funding reached $210 billion globally during the last year? And this massive investor tells us something important about where the industry is hidden, because the market is clearly betting big on technology-driven financial innovation. And this trend shows no signs of slowing down. Next slide. So now let me share with you one of the most successful examples of financial technology innovation, which is ATM. So it's a perfect case study of how technological innovation can transform banking operations while simultaneously improving customer experience and reducing costs. The matter is that the first major breakthrough was 24/7 cash access. And before ATMs, for example, if you needed cash outside of banking hours, you were simply out of luck, because this might seem basic to you now. But imagine the revolutionary impact this had on customers' lives when it was first introduced. It really fundamentally changed people's relationship with their money, given the unprecedented access and control. For example, when a customer conducts a transaction with a human teller, it costs the bank over $4 per transaction. And the same transaction at the ATM, how much does it cost? Just 25 cents. So 4 times less. And that is a reduction of more than 90% in transaction costs. So this dramatic cost difference made it possible for banks to offer more services while keeping fees reasonable. But there's another aspect that's equally important, which is the reduction in the need for physical bank branches, because ATMs allowed banks to maintain customer service levels while significantly reducing their brick and mortar footprint. And this was a win-win situation because customers get better access to their money and banks could operate more efficiently. And this is why I consider the ATM one of the most successful financial innovation ever in the history. So because it perfectly balanced customer needs and business efficiency. Next slide. Now let us talk about another revolutionary advancement in financial technology, which is online banking. So I want to share with you how this innovation fundamentally transformed the relationship between banks and their customers. For example, if you think about account management for a moment, before online banking, every single banking task required either a phone call or a visit to the branch. And now customers can manage their entire financial life from their laptop or desktop computer, whatever. So I remember when this was first introduced, the ability to check our balance instantly, for example, anytime, and it was really considered almost magical. But the real game changer came with features like bill pay and transfers, because these features completely eliminated the need for paper checks and physical bank visits for many custom operations, for the majority of custom operations. And for example, when I think about the impact, it's not just about convenience, it's about giving people back their time and putting them in control of their finances. Next slide. Let me now explain why big data analytics represents such a revolutionary shift in how banks serve their customers. Because this is one of the most exciting developments I've seen in my career in financial services. So, and what makes big data analytics so powerful is its ability to process vast amounts of information from multiple sources, both structured and unstructured. So, we are talking now about everything from transaction histories to social media interactions, from spending patterns to life events. But here's what's really fascinating. It's not just about collecting this data. It's about making sense of it in ways that create real value for customers. So, and now let me give you a concrete example, because today banks can analyze a customer's spending patterns. For example, income flows and life events to proactively offer relative financial products to them. And for example, you can imagine a customer who's just increased their saving rate and is browsing a real estate website. So the bank can now identify this pattern, and a bank can now offer a tailored mortgage product before the customer even asks. So, and the level of personalization was simply impossible in the past, as you may remember. And where, for example, when I started in my banking, so the personalization meant putting the customer's name on a form letter, for example. But now we can create truly individualized experiences based on each person's unique financial profile, behaviors, and needs. And it's not just about selling products anywhere anymore. It's about providing the right financial solutions at even exactly and right time. So, and this is what I call true personalization powered by data. Next slide. So now let me share with you one of the biggest challenges financial institutions face when implementing new technologies. And this is the significant upfront investment required. And this is something I've seen many institutions struggle with. And it's really crucial to understand the scale we're talking about. So when we talk about implementation of new technologies in financial services, we are looking at investments that can range from tens of millions to well over $100 million. And this isn't just about buying new hardware, software. It's a comprehensive investment that covers multiple areas. For example, we are talking about purchasing new systems, setting up cloud services, and even building network infrastructure, training staff as well, and perhaps most challengingly, integrating everything with existing systems. And what is particularly interesting in this is the ROI equation, because while these investments are substantial, they can definitely pay off in the long run. Because, however, and this is crucial, success here requires two key elements: diligent change management and patience. And for example, I've seen institutions rush this process and end up with expensive systems that the staff either can't or won't use effectively. And the key message I want you to emphasize is that while these investments are necessarily for staying competitive, they need to be approached strategically. And it's not just about throwing money at new technology, it's about making smart, calculated investments that align with your institution's long-term goals and capabilities. Next slide. So, legacy systems complicate integration of new tech. Yeah, and this is really one of the most challenging aspects of technological transformation in financial institutions, because the integration of new systems with legacy infrastructure is the most challenged. And this is an issue I've seen cause significant headaches across industry. And here's the reality that many financial institutions face. They are running on mainframe systems that might be decades old, yet these systems are still processing millions of critical transactions daily. And you can't just turn them off and start fresh systems instead, because what is particularly challenging is that these legacy systems weren't designed with modern integration capabilities in mind. And let me share now a striking figure that illuminates illustrates the scale of this challenge, which means that top banks spent over $15 billion annually just on integration efforts. And that's an enormous investment. It's absolutely necessary, because seamless integration is crucial for delivering what customers expect today: a consistent omni-channel experience. Next slide. And now let me address what I consider one of the most critical challenges in modern financial technology: the exponentially growing cybersecurity risks. And this is something that keeps many financial executives awake at night, and with really good reason. Because as we move more financial services online into apps, for example, into web apps, we are essentially creating new entry points for potential cyber threats. Because every new digital service, while providing convenience to customers, also presents new opportunities for hackers, data breaches, and various forms of cyber fraud. And this is not a theoretical risk, it's a daily battle. So, and now let me share a relevant statistic. For example, JP Morgan alone spreads for about $600 million annually on a security, just on security. This is a staggering figure, but it reflects the scale of the problem. And when we talk to banking executives, so they often tell that cybersecurity is no longer just an IT issue. It's really, nowadays, it's really a fundamental business risk that requires attention and investment. And financial institutions are responding with multiple layers of defense. For example, advanced encryption, sophisticated firewalls, biometric authentication, and more. But what's fascinating is that this is essential and foregoing. And a key message I wanted to take away is that cybersecurity isn't just a technical challenge. It's a fundamental aspect of financial innovation that must be built into every new service from the ground up. Now let me address a critical challenge that often gets overlooked when implementing new financial technologies, which is user acceptance. So, in my experience, this human factor can make or break even the most technically sophisticated solutions. So, and what I've observed repeatedly, for example, is that people may resist new financial tools for various reasons. Sometimes it's simply a lack of understanding about how they could use them, and on the other hand, there is a danger and very deep distrust of digital banking solutions. And in many cases, for example, particularly within financial institutions themselves, there is fear about job automation. So, and let me share a practical example I've encountered. For example, a bank must implement a state-of-the-art digital payment system, but its customers don't just trust it, for example, or find it too complicated. But they will simply continue using traditional methods. And this is why I always emphasize that successful technology implementation isn't just about the technology itself, it's about the new, it's about the way how we introduce it to users. This is more proactive education and training because of it becomes absolutely crucial because we need comprehensive change management strategies that address both customers and employee through education and training. And I've seen really many cases where excellent technical solutions failed simply because not enough attention was paid to the human element of adoption. Okay, let's go on. Now, let me emphasize a critical aspect of implementing emerging technologies in finance. So we need a specialized talent. And today, I want to share with you why having the right technical expertise is absolutely crucial for financial institutions. Because in my experience working with bank and fintech companies, I've observed that specific technical skills are becoming increasingly vital. because we are talking about expertise and in the artificial intelligence, user experience, and fintech. And these services aren't just buzzwords because they're fundamental competencies needed to build and drive the next generation of digital financial services. And for example, JP Morgan, one of the world's largest banks, currently JP Morgan currently employs for about 50,000 technology specialists, as you can see here in the slide. And this number, as to my opinion, this number alone shows you the scale of technical talent needed in modern banking. However, not all financial institutions have the resources to maintain such large technological teams. And that's why we are seeing an interesting trend. Many banks are choosing to partner with fintech companies to access this specialized talent pool. And the reality is that without these technical specialists, financial institutions simply cannot complete the points of competition, I would say, in today's digital-first environments. And every new financial product or service now has a significant technical component that requires expert implementation. Next slide. And now I'd like to discuss a crucial factor that shapes the landscape of financial technology, which is regulation. Just a few additional words about that. In addition to the previous lecture, to the previous part of the lecture, I would say that from my work in the industry, in the banking industry, I can tell you that governments worldwide try and to achieve a delicate balance here. Because on one hand, they want to establish prudent consumer protection guidelines, and on the other hand, they aim to promote institution and foster new competition in the financial year. And the overall, the regulatory framework has a profound impact on how we develop and implement new financial technologies. Because, for example, if you think about various aspects like data privacy requirements, capital requirements for financial institutions, and lending practices, and these regulations directly influence what we can and cannot do with new technologies. Next slide. And I'm particularly excited to talk about blockchain technology, which, as to me, represents one of the most significant innovations in financial technology. For those of you who doesn't familiar with that kind of technology, I will try to explain briefly. At its core, blockchain technology enables something truly revolutionary, like, for example, the ability to conduct secure peer-to-peer financial transactions without the need for traditional centralized intermediaries. And what makes this particularly powerful is that transparent things like this bring to transactions, because every transaction is recorded on a distributed ledger that can be altered, creating an unprecedented level of trust and security. So, and let me share some more practical applications we're seeing today. Beyond the well-known using cryptocurrency, blockchain is now being utilized for smart contracts, supply chain tracking, and various other financial applications. And what's particularly interesting from a business perspective is that the potential cost saving, its estimates suggest that the bank could save between $58 to $112 billion annually by only by implementing blockchain technology. And I would add finally that implications of this technology are far-reaching, as to me, because, for example, if you think about international transfers that currently take days and involve multiple intermediaries, blockchain can potentially execute these transactions in minutes with complete transparency. And this is why I believe understanding blockchain is just isn't just an optional anymore, because it's becoming essential for anyone working in modern finance. Now, the next slide. Now let us talk about something that's fundamentally changing how we analyze financial data, which is the combination of artificial intelligence and machine learning. And this is really transforming the financial services landscape. And what fascinates me about artificial intelligence, machine learning, is their extraordinary ability to process and to make sense of massive amounts of data. And overall, these technologies can identify complex patterns that could be impossible for humans, for example, to detect and do it manually. And for example, by leveraging big data sets and sophisticated machine learning models, we can now derive predictive insights and make recommendations with unprecedented accuracy. So, and if you would like me to give you a real-world example, so it should be like this. When we talk about hyper-personalized financial planning, we're talking about AI algorithms which are analyzing thousands of data points for the customer's financial behavior, and also life events and market conditions to provide tailored recommendations overall. And in fraud prevention, for example, machine learning models can detect suspicious patterns in real time and analyze transactions across millions of accounts simultaneously. Next slide. Just 30 seconds. Sorry, we go on. So now let's talk about something that is revolutionizing the banking industry, which is APIs, or application programming interfaces. And honestly, I'm particularly enthusiastic about this topic because it represents a fundamental shift in how banking services are delivered. And what makes, as to me, API so transformative in the ability to enable third-party fintech companies to build complementary applications and services that integrate seamlessly with bank platforms. And for example, if we think about APIs as secure bridges that allow different financial systems to communicate and share data with each other, so there might be more understandable the purpose of these of such systems. And overall, this creates what we call open ecosystems for collaborative innovation. Let me give you a concrete example from the European Union's Open Banking Initiative. So, according to this initiative, banks are now required to provide APIs or build APIs that allow authorized third-party providers to access customer account information and initiate payments with the customer's consent, of course. And this has led actually to an explosion of innovative financial services and applications. And the beauty of this approach is that it allows banks to leverage external innovation while maintaining control over their core systems. And instead of trying to build everything in-house, for example, banks can partner with specialized financial companies to offer new services to their customers. And this is uh, uh, the most dynamic and competitive financial services landscape where innovations can flourish. Next slide. And now I'd like to discuss a technology that is fundamentally changing how financial institutions manage their computing resources, which is cloud computing. And this is a really game changer in terms of operational capabilities. And what makes cloud computing particularly powerful that is its ability to provide on-demand access to vast computing resources. And for example, you can think about it like that financial institutions can now access enormous amounts of computing power and even data storage and even bandwidth and scale these resources up or down instantly based on their needs. And this is a radical departure from the traditional model of maintaining fixed IT infrastructure. So, and now let me give you a practical example of why this matters. For example, during periods of high market volatility or peak trading seasons, financial institutions experience massive surges in demands for their services. And with cloud computing, for example, they can immediately scale up their computing capacity to handle their spikes and then scale back down when the demand normalizes, for example. And this kind of flexibility was simply impossible with traditional IT infrastructure. And financial institutions can now experiment with new services and applications without making massive upfront investment in hardware. For example, they can test, iterate, and deploy new solutions faster than ever before. And this is truly transforming how financial services are developed and delivered. Next slide. And now let's go into one of the most disruptive innovations in finance, which is cryptocurrency. And this is a topic that's fundamentally changing our understanding of what money can be in the digital age. And what I like most of all about the cryptocurrency space is its explosive growth and diversity. So because we now have thousands of different cryptocurrencies, with Bitcoin and Ethereum being the most well-known. But these digital currencies enable something remarkable. For example, the ability to transfer money globally without the need for traditional central banks on financial intermediaries. And let's put this into perspective with some numbers. For example, the global cryptocurrency market capitalization has reached $2 trillion. And that's a staggering figure that demonstrates the scale of this transformation. And however, I should point out that the major volatility remains one of the key challenges in this space. Because the value of cryptocurrencies can fluctuate dramatically in short periods of time. And what's particularly interesting is how cryptocurrencies are pushing the boundaries of technical innovation, because they are not just digital versions of traditional money, they are enabling new types of financial products and services as well, from decentralized finance applications to non-fungible tokens. And this is why I believe understanding cryptocurrency is becoming essential for anyone working in modern finance. Next slide. Now let's talk about something that's transformed how most people interact with their banks, like mobile banking, for example. And this is a perfect example of how technology can fundamentally change consumer behavior and expectations in finance. And one thing excites me for example, it relates actually to the banking accessibility. For example, through smartphones, customers now have 24/7 access to their finances literally in their pocket. But it's not just about checking balances or making transfers anymore. Mobile banking has enabled entirely new use cases that previously required physical presence in the bank branch. And today, for example, customers can open new accounts, apply for loans, and even receive personalized financial service or advice, all through their mobile banking app. So that's it. Next slide. And here it's very good to discuss a technology that's democratizing access to investment management, which is robo-advisors. And this is a very perfect example of how automation can make sophisticated financial services more accessible and affordable. And what makes robo-advisors particularly what makes them particularly interesting in their use of algorithm to provide automated portfolio management, trading, and rebalancing services as well. And these platforms can determine an investor's goals and risk tolerance, and then they may create and manage a diversified investment portfolio accordingly. And the best part, the best part of this is that they do this 24/7 without any human interaction. Next slide. And now I want to mention a fascinating innovation that's reshaping lending markets, which is peer-to-peer lending, or B2C, C2C lending. First of all, this technology is fundamentally changing how people or small businesses access capital. What makes P2P lending particularly revolutionary is how it cuts out the traditional banking middleman. Because through platforms like Lending Club, for example, retail investors can now provide loans directly to consumers and small to medium enterprises. And this direct connection between lenders and borrowers is creating new opportunities for both sides of the market. And now let me put this into perspective with a few numbers. For example, P2P lending and platforms for P2P, they are all together have originated over 50 billions dollars in loans. And that's a really significant amount of capital that's being channeled directly from investors to borrowers. So, and the beauty of P2P lending actually lies in its efficiency, because by leveraging technology to automate credit assessment or loan origination, payment process, and these P2P investment platforms, can operate with lower overhead costs than traditional banks. And these cost savings often translate into better interest rates for borrowers and lenders, and higher returns for lenders. See, that is a particular benefit for one of the part of the process. And this is why I really believe in P2P lending. Next slide. And now I'd like to discuss one of the most dynamic developments in retail banking, which is the rise of challenger banks. And these digital-first institutions are fundamentally reshaping how we think about banking services. For example, what makes challenger banks like Chime, Monzo, or Nubank, what all make them particularly interesting? That is how they are using technology to compete against traditional incumbent banks. Because these institutions are built from the ground up with modern technology stacks, which allows them to offer something truly different. For example, a sleek, user-friendly banking experience with significantly lower fees than traditional banks. So, and let me share some concrete numbers to illustrate this impact. So, for example, if we take Chime, for example, we've already attracted, they have already attracted over $12 million in accounts, and that's a remarkable about this growth, which is so there's a question according to their growth, which is how quickly it's happened. And these challenger banks are acquiring customers at a pace that would have been unthinkable for traditional banks. And what I find particularly fascinating is their approach to banking. Because instead of trying to replicate everything from traditional banks, they focus on specific customer plan points and solve them exceptionally well. Whether it is early access to paychecks, no-fee accounts, or instant notifications. So the next slide from the previous presentation is devoted to the challenger banks. So, and now I'd like to discuss one of the most dynamic developments in retail banking, which I would call the rise of the challenger banks. And the matter is that these digital-first institutions are fundamentally reshaping how we think about banking services. And honestly, I find their approach absolutely fascinating. For example, what makes challenger banks like Chime, for example, Monzo and Nubank, what makes them particularly interesting? It's how they're using technology to compete directly against traditional incumbent banks. And moreover, these institutions are built from the ground up with modern technology stacks, which allows them to offer something truly different, which is a sleek, user-friendly banking experience with significantly lower fees than, for example, what traditional banks typically charge. And now let me share some concrete numbers to illustrate their impact. For example, if we take Chime, they've already attracted over 12 million accounts. And what's remarkable about the growth of this bank is how quickly it's happened, actually. And for example, these challenger banks are acquiring customers at a pace that would not have been unthinkable for traditional banks, for example, just a decade ago. And what I find particularly fascinating is their approach to banking. For example, instead of trying to replicate everything traditional banks do, they focus just on specific customer pain points, and they also solve them exceptionally well. And whether it's early access to paychecks, for example, whether it's no-fee accounts or instant transaction notifications, nevertheless, they are demonstrating how technology can be used to create a more customer-centric banking experience that indeed truly resonates with modern consumers. And this is why I believe challenger banks are not just a passing trend, so they represent a glimpse into the future of retail banking, where, for example, technology and customer experience may be an absolute center of everything. The next slide. And now let's discuss a trend that's reshaping the competitive landscape of financial services, which is the entry of major technology companies into finance. And this is really fascinating development that's blurring the lines between tech and financial services. And I think that it has profound implications for the future of banking. And I think also that what makes this particularly significant is how companies like Apple, Amazon, and Google are leveraging their massive existing user bases to offer integrated financial services. And these aren't just simple payment solutions anymore. So we must understand that we are seeing these companies expand into credit, investment, and other traditional banking services that were once the exclusive domain of financial institutions before. And to my opinion, the most interesting about this trend is their unique advantage, like data and reach. And for example, these tech giants have deep insights into their customers' behaviors, into their customers' preferences, spending patterns, accumulated over years of interaction with them. And therefore, they are leveraging this knowledge to create highly personalized financial products and services. And for example, you can think about how Amazon knows your purchasing habits, or how Google understands your search patterns and daily routines. Now you can imagine that knowledge being applied to financial services. And the implications are profound as well, because these companies don't need to build a customer base from scratch. They already have millions or even billions of users who trust their brand and who use their platforms daily, for example. And by integrating financial services seamlessly into their existing ecosystems, they are now creating new convenient ways for people to manage their money without ever living their favorite apps. And this is why I really believe that big techs and their entry into finance represents a significant shift in the competitive dynamics of financial services. And traditional banks are now competing not just with fintech startups like before, but with some of the world's largest and most data-rich technology companies. Next slide. And what I would like also to discuss with you is how biometric technologies are revolutionizing security in digital financial services. And this is something that's becoming increasingly central to how we protect financial transactions and data. And as we can see, biometric authentication methods like fingerprint, like facial recognition or voice identification also are becoming increasingly prevalent in the financial sector. And what's particularly impressive is that, for example, fingerprint verification systems have achieved up to 98% accuracy rates. And this makes them incredibly reliable for securing financial transactions and data. And this is really a significant improvement over traditional password-based systems. And for example, when I work with banking clients, I often emphasize that biometrics offer a unique combination of enhanced security and improved user experience as well. So we can think about it the following way. So instead of remembering complex passwords or carrying authentication tokens, customers can simply use their inherent biological characteristics to assess their accounts and authorize transactions. And this seamless authentication process also removes friction from the user experience while actually increasing security. And what makes it, biometric authentication particularly powerful is that biological characteristics are extremely difficult to forge or steal, unlike, for example, passwords or even PINs. And this significantly reduces the risk of identity theft and unauthorized access to financial accounts. And therefore, banks are increasingly deploying these solutions across their digital platforms, from mobile banking apps to ATM access and even in-branch authentication systems. And the future of financial security is undoubtedly headed in this direction, where authentication becomes both more secure and more convenient simultaneously. Next slide. So let me summarize the key points we've covered in today's lecture, starting from the previous one about technology's role in financial innovations. And I believe these takeaways are really crucial for understanding the current state and future direction of financial services. Therefore, first, I want to emphasize how new technologies, and particularly mobile banking and artificial intelligence and blockchain, are fundamentally transforming the financial services landscape. So we are seeing innovative products, new distribution channels, and completely reimagined business models emerging across the industry. And from my research and industry experience, I can tell you that financial institutions which adopt emerging technologies may see significant improvements in operational efficiency and in cost reduction as well. And however, I must emphasize that this transformation requires substantial upfront investment. which is a critical point that many organizations tend to overlook when they are planning their digital strategies. And I find it particularly fascinating is how big data analytics and AI are enabling hyper-personalized financial services, because we are now moving away from the one-size-fits-all approach, so-called, to truly customized solutions based on sophisticated data-driven decision-making. And this also represents a fundamental shift in how financial institutions understand and serve their customers. Therefore, another crucial development I've observed is the rise of API-driven open banking ecosystems, because this is allowing fintech companies to build integrated services on traditional banking platforms, creating a more dynamic and innovative financial landscape where collaboration drives progress. However, I must stress two critical challenges that require ongoing attention. First of all, while technologies like blockchain enhance security in many ways, the overall digitalization of financial services increases cyber risk substantially, requiring more cybersecurity investment. And additionally, integrating new technologies with legacy systems remains difficult, but absolutely key for delivering unified customer experiences. And finally, let me emphasize the human factor, because overcoming distrust and properly training people on, for example, new financial technologies, it is really crucial for example, achieving mainstream adoption. And technology here is only as effective as people's ability and willingness to use it. Next slide. So now I would like you to answer a short quiz. So you can see here on the slide a question, which I will spell. Which of the following best enables financial institutions to leverage open innovation while maintaining regulatory compliance and security standards? So I would like you to select the only answer from the four proposed. So let us take, say, 3 minutes for that. That is not very difficult, I guess. And then I will show you the right answer. So you have to put in the right number, the right answer into the chat, please. And if you wish, I would also appreciate if you argument your answer somehow, if you support your answer with a few words. Okay, let's get back. Yeah, four APIs allow legacy systems to integrate into an existing one. Yeah, very good. So, okay, let's go to see the right question. Yeah, that is 4. You're quite right. So I'm very pleased about that. Yeah, really, open API platforms. So I will analyze actually all of your answers afterwards and all of your arguments. Don't worry about that, and I will appreciate and take into account your activity. Finally, yeah, great. So let's go to the next slide then. So, and I have actually a few issues for discussion based on the previous slides of the lecture. So let us take, say, I don't know, up to 5 minutes, I say, to select and answer or discuss any one of these 3 issues. So you can select any one of these three issues. And write please in the chat, what do you think about it? How do you consider it? Let's take, say, four minutes for that. And also, please check once again, and would you mind to change your name and surname in English? Write your name and surname in the system in English. Just make it possible to identify you afterwards and identify your answers and activity. And thank you beforehand.
Excuse me, Professor. The previous task, is it all right if I submit it to like the answer in the form? I just skipped the idea that we are answering in the chat.
No, it's not a problem. So you can either answer in the form, but it's not obligatory. But you can answer also in the chat if you wish.
All right. Thank you.
But if you answer in the chat, so it will be much easier to track your answer.
Yeah, I understand. Thank you.
Excuse me, Professor. Due to some reason, I'm not able to open the chat.
You can find it here in the dashboards on your screen. So do you see
found it? I don't know. There are some technical issues. I'm clicking it and I'm unable to open it.
Yeah, it's next to.
Working.
It's not working.
Participants. Yeah, it's not.
So it's next to participates. Yeah.
Right.
But you can choose all in the chat if you can open an appropriate window. Yeah, and you can write at the bottom of this window, you can write any message. But nevertheless, for those of you who are not able to answer through the chat for some reason, so finally you can answer in voice, and so the lecture is transcribed, and therefore anyway I can catch your answer. But it's a final decision. So the preferable method is to answer through the chat. Well, for those of you who are not in time yet, but it's not a problem, so you can go on written your answers in the chat. It's no problem anyway. Yeah, I can see them, but anyway, I will track your answers afterwards, just not to spend time, because we have plenty of slides left, and therefore a lack of time, as it always happens, to my sorrow. But anyway, I will track all of your answers afterwards and give you feedback for some of them. Anyway, so let's go on. So here you can find a short glossary of the general glossary of the terms of the lecture, which you can find on the Smart LMS resource of the High School of Economics, where I'm going to upload all of the presentations of all of the classes. Please don't worry about that. Therefore, you can search the unknown words or terms afterwards.